Hey everyone, I'm back. In all seriousness, I'm excited to introduce something new I'm doing for all my clients starting this month. Each month, alongside your investment report, I will be recording a short video walking you through what happened in the markets over the prior month. Just a straightforward conversation, like we would have if you called me up and asked Joe, what the heck's going on here? These videos will be short, typically under 3 minutes. I hope you find them helpful, and as always, if anything I say raises a question about your specific situation, please do not hesitate to reach out. Now let's talk about March, because it was quite a month. The big story of the month, the dominated theme in the month of March, as you can guess, was the U.S.-Iran conflict, which began at the very end of February. Headlines were moving fast, and markets moved with them based on the latest news out of the Middle East. How did we do in the month of March? Well, here in the U.S., it was a tough month, as you can imagine. Across the board, the S&P 500 fell 5.1%. The Dow dropped 5.4%, and the NASDAQ declined 4.75%. Year to date through March 31st, the S&P is now down 4.63%. The Dow is down 3.58%, and the NASDAQ is down 7.11%. International markets also sold off in March, with our international index declining about 7.83% for the month. That said, international stocks are still holding up better than U.S. markets on a year-to-date basis, down just 1.15% compared to losses of roughly 4 to 7% across U.S. indexes. That gap matters, and it's exactly why we do not put all our eggs in one basket. Energy prices surged during the month, of course. Brent crude topped 100 a barrel for the first time since 2022. On the bond side, the 10-year Treasury yield climbed from about 3.97 in late February to as high as 4.44% in March, pushing mortgage rates and borrowing costs higher. The Fed held rates steady, and markets largely priced out any expectations of rate cuts for this year. How did some sectors and winners and losers do? Energy was the clear winner, up nearly 32% year to date. Obvious. Technology and industrials bore the brunt of selling, with even some of the largest tech names posting meaningful declines during the month. What does this all mean? Well, the stock market has been choppy this year, with the S&P experiencing its first pullback of 5% or worse. Really not the end of the world. It's important to remember that these pullbacks around this size are completely normal. In 2025, for example, there were 6 such pullbacks for the S&P 500, driven primarily by tariffs, if you remember. Yet the market still generated a return of 16% for the year. Your portfolios were built for moments like this. Diversification across U.S. stocks, international markets, and bonds is doing exactly what it's designed to do, cushioning the downside and keeping you positioned for the recovery when it comes. Look out for one of these videos at the start of each month going forward. They will always be awaiting for you alongside your report. And as always, if you have questions about your specific account or just want to talk through what this means for your financial plan, do not hesitate to reach out. I'm here for you. Talk soon.